Hello and welcome to Principles of Accounting. Today we're going to talk about the different types of businesses. So we have three different types of businesses. We have for-profit, not-for-profit, and government. Now, our for-profit companies, their main objective is to make a profit. And when I say their main objective is to make a profit, I mean that their goal is to have more revenues than expenses, since revenues minus expenses equals our profit. Some examples of for-profit companies is Walmart, Farmers Bank, and Ford Motor Company. So our not-for-profit companies are not motivated to make a profit. Yes, they can still make a profit, but their goal is not to make a profit, but instead to aid others. They receive a lot of donations and all of their earnings and profits is tax-free. Now, for-profit companies like Walmart, Farmers Bank, and Ford Motor, they will pay taxes on their earnings and profits. Some examples of not-for-profits are Magnolia Hospital and SAU. Now, government, their goal is to provide a service for the benefit of citizens and to manage the resources properly. Most of the income from governments come from taxes to citizens. That's why it's important for the resources to be managed properly. Some examples of government businesses are the City of Magnolia. The City of Hope will be another. So now we're going to move on to the different types of for-profit businesses, because that's what we'll cover in this class. I'm going to take it back just one step because I want to touch on something else. In this class, we are going to cover for-profit businesses. That's what we're going to talk about in this class. Now, if you are an accounting major, then I will see you in a couple of years and we will learn about not-for-profit and governmental in the class called governmental and not-for-profit. But in this class, we are only going to talk about for-profit businesses. So we have three different types of for-profit businesses that we'll learn about in this class. One of them is service businesses. Now, a service business provides services rather than products to a customer. So like a hairstylist will provide a service to a customer instead of a product. So a beauty salon would be a service business. Same thing for a nail spa. So with a service business, the customer do not get to keep anything. So like as I will go into Walmart and purchase soap if I needed soap and I get to keep that soap. For service businesses, me as the customer will not have anything that I would keep because that business will be providing a service to me, not an actual product. Some examples of service businesses is Walt Disney, Delta Airlines, and Star Cinema. Now, a merchandising business or a retail business. In your book, it is called a retail business. Merchandising and retail businesses are the same, okay? So a merchandising business sell products that they have purchased from another business to customers. So with a merchandising business, they would purchase these products from a completely different business and then turn around and sell those products to their customers. Some examples of a merchandising business is Walmart or Gap or Brookshire's. And then the last one is a manufacturing business. So manufacturing businesses assemble raw materials into finished products and sell them to their customers. So a manufacturing business would be a business that actually produce these products, like they're actually making products to sell, okay? So it's if the company actually makes the products that they sell, it is a manufacturing business. An example of manufacturing business is Ford Motors, Shell, or Coca-Cola. So just to repeat what we've already went through, service businesses provide services rather than products. Some examples is a restaurant, Uber, or a hair salon. And then we have merchandising businesses, AKA retail businesses, and merchandising businesses sell products from businesses to customers. So they'll purchase these products from a business and then sell them to their customers, okay? Examples of those are Amazon, Fashion Nova, and Walmart. Then we have our manufacturing business that produces products to sell to customers. So they're going to make the product that they sell to their customers. Some examples of it would be Apple or Ford Motors. So now we're going to move on to the different types of business structures or business organizations. So we have sole proprietorship, partnership, corporation, and a limited liability company. Limited liability company is AKA LLC. So it's also known as LLC. For short, people just say LLC instead of limited liability company, but that's what that means. So if you see LLC, you know that it means limited liability company, okay? So we're gonna go over these different types of business organizations. We'll start with our sole proprietorship. So with the sole proprietorship, it's only one owner. And with the sole proprietorship, the business is not a separate entity. And when I say the business is not a separate entity, I mean like the debt from that business is also the owner's debt. So let me repeat that. The debt from the business is also the owner's debt in a sole proprietorship. So if the business owes someone, that owner also owes someone. If the business was to go out of business owing someone, then that creditor can come after the business owner's assets. Okay, so 70% of businesses in the US fall in the category of sole proprietorship. It is mostly used for small businesses. It's easy and inexpensive to organize. Now we'll move on to partnerships. Now, partnerships, you have to have 2 or more owners, and 10% of the businesses in the US fall in the category of either partnerships or LLCs. Now, there are different types of partnerships, which we will not cover that in Principles of Accounting 1. But we have about 3 different types of partnerships, and you'll learn about that if you're an accountant major. If you're an accountant major, you'll learn about that in advanced taxation, but we will not cover it in this class. The thing that I want you to know about partnerships in this class is that it has to be 2 or more owners. And 10% of the businesses in the US are partnerships or either LLCs, which brings us to LLCs, which, like I told you, means limited liability company. With the limited liability company, they can have more than one owner, and it protects the owner. With the LLC, the owner is protected from being liable for the company's debt. So like that, with the sole proprietorship, the creditor can come after the owner. With the LLC, they're protected. The business is a separate entity with LLCs. So, as I said previously, 10% of businesses in the US are partnerships or LLCs. Now, let's go on down to corporations. Sorry, has tax or legal liability advantages for owners. So that's what I was telling you all about as far as a legal liability advantage that an LLC has is that creditors cannot go after the owners for debts that the business owns. Oh, sorry. So let's move on to corporations. 1 or more stockholders will own the company. 20% of businesses in the US fall in the category of corporations, and 90% of revenues in the US come from corporations. And it's mostly used by large businesses.